Thanks, Sam. Well, hello, everyone. I'm Ainslie Clubb. I'm here to welcome you to Trader Talk Radio, 26th of March, 2023. Presented to you by Actions to Wealth. And I'm just going to jump straight into it. So I'll share the screen and away we go. Okay. Well, I've got to say, it's been a bit of a huge week on the financial markets this week, hasn't it? We've had a banks fail, and we've had the Fed increase interest rates when we didn't expect that they would, and we're certainly tugging away with trying to work out which way up is in the market. So let's go over a few of the things and why they were significant. We've got to address the Silicon Valley Bank shuttering on previous Friday week ago. Why that became quite significant is, one, it was the 16th largest bank in the US and it failed, and it didn't have enough reserves to cover deposits. So that was a bit of a serious issue as far as a bank goes. But where that was feeding into, it wasn't just the simple case in isolation. It was definitely a lot of the contagion, the fear, the contagion, and how that was going to spread through. There was a lot of, okay, here we go. Is this beginning of 2008? Again, we're going into a recession. We've got inflation. We've got a whole heap of other issues. So where that became an issue was definitely what was this the start of. So that had a real negative effect on things like the S&P, not necessarily as much as the NASDAQ, because no banking shares are in the NASDAQ, but that then followed on through to the Signature Bank and obviously the debacle with Credit Suisse. Now, Credit Suisse was a separate banking issue all on its own, with the Swiss National Bank and the USB stepping in and the Swiss finance minister and everybody else. I think there was a little bit of reluctance for Credit Suisse to perhaps be sold out to, I don't know, maybe an American bank or something of the sort. So that's the way the week started, and the impact that had on the market was that it was contained. It was the whole we had a solution, we had a swift solution, we had a quick solution, and the markets rallied, as you saw on Monday morning. Where that then led into, so the banking crisis seemed to have been averted, and then we went sideways for a bit because apparently the Canadian inflation held steady. I don't think that was really a prime factor. It was if you're Canadian, but in the scheme of things, everybody was really waiting to see what had happened with things like the British pound. We had inflation come in at 10.4. It was sitting at 10.1. It had expected to fall to 9.9, but I think with everything else that was going on, it went in the wrong direction. So that caused a bit of a panic over there as well. The main event for the week was listening to Jerome Powell it was Thursday morning here, it was Wednesday night in the States. Against the backdrop of the banking crisis, well, they're calling it a crisis now, and the inflation and a few other experts. Sorry, that was fireworks in the background. It's an opera down on the harbour and it's fireworks. So sorry, I thought something had happened. The Fed had actually went ahead and raised 25 basis points and raised their interest rate. So it was one of those things where nobody really knew what was going on. They didn't know whether there were some banks calling for Jerome Powell not to actually increase interest rates of all. There was some calling for them to actually cut it. And some were saying that he might just go ahead and jack them straight up by 50 basis points. It was, as was expected, it was 25 basis points. And I think in the midst of all of it all as well, the Swiss National Bank, they raised their interest rates by 50 basis points as well. So going back to the main event. So Jerome Powell, he raised his interest rates by 25 basis points to 5%. He then said in the press conference, which was where you actually need to listen. More importantly, whether he's going, how much is pretty much baked into what he was going to do, except for there was a bit of unknown around what was going on the Thursday morning, my time. So he raised the interest rates. But what he did then go on to say in the press conference was that he is going to definitely reinforce his mandate to make sure that he can bring inflation back to 2%. And he said if he needs to raise interest rates higher, it will. He did make a note of the serious problems in a small number of banks, but in the scheme of things, he felt that it was under control. Now, the Fed will continue the same pace of balance sheet unwind, so take the pressure off the economy, bring the inflation down. But if you have a look at what he meant by that, I'll show you on the next slide, and this is a chart that was borrowed from the $1 Million Traders Club. Thank you, Simon. This is what it looks like. He has actually undone 2/3 of his balance sheet in the last, that has come down. He bounced it back up and it's been reversed in 2 weeks. So he's in a bit of a mess there, but yeah, not doing it at the same rate. We need to make a note of Christine Lagarde, who's trying to keep everything on balance with the euro. Now, the euro had previously, not last week, the week prior, they raised interest rates quite significantly in comparison to a few other countries. They just raised it by 50 basis points. She had to come on, she made 2 speeches during the week, and one of them was to actually confirm that the banking system is solid in Europe. Again, there was this fear of contagion and what that could possibly unwind. But then she came on later on in the week, and I think this is a really eloquent and quite a solid reassurance, was that she sees no trade-off between fighting inflation and supporting the stability of the banking system. So she made it quite clear that the two were quite separate. She was going after inflation. The banking system was separate. It was a separate identity, and she's got tools to address each. I think it was important that you noted that that's what she made. She made that quite clear distinction, because how that played out was that the euro was far more stable than what we heard in the rhetoric from Jerome Powell and the helpful comments from Janet Yellen during the week, the Treasury Secretary. So all those kind of things play into the nervousness of the market as a whole. So let's have a look at the euro 4-hourly and daily chart, because that does tell the story. You can see, as with everything, let's look down to the granular. The market took off, bit of stability, and at the end of the week, it's come back in again. High test bar from a technical point of view, you've got a high test bar happening here on Thursday with the market dropping off. But again, if you look at it over the last 1, 2, 3, 4, 5 days, the euro's been up and back down again. The same, you'll see that right across the market. They just didn't know which way it was going. So this week just gone, it is certainly, you're going to see the similar things. The pound, here we go, up, down, up, and back down again, and trading in a fairly tight range. I think if you can see that on the pound, it did, even though the inflation that we saw come out on Tuesday was not what they expected, it certainly rebounded, again, with expectations of the US dollar, and obviously with the pound against this US dollar chart, you can see that it's just gone absolutely nowhere. It's just, we're spinning wheels here at the moment. I think there's a lot of caution. A lot of people aren't not knowing which way to go. So if you aren't trading, or you're finding the news a little overwhelming, it's not a bad idea to be sitting out of the market, because you can be long, you can be short, or you can be out of the market. It's certainly a position, and sometimes it's a lot safer if you are still trying to protect your capital. Japanese yen had a slightly different story, and I think that again goes to the whole flight to a bit of safety, considering it's strengthened, and it has continued to strengthen the whole way through this time. It isn't like the pound, it is not like the euro, where we see it goes 3 days up and 2 days back. So we haven't had that this week. It's certainly continued. It's stretched from the beginning of, or middle of March, and it's continued all the way down. So it's a strengthening of the Japanese yen. And I think there's a a flight to safety. Whether that will continue, not sure. As you can see, it's just everything seems to be coming into certain levels and squaring off. And that might have a lot to do with the fact that we are coming into the last week, coming into month end, and obviously end of Q1. Swissy, again, not much chop. In fact, look at how flat those moving averages are in the beginning of the week. Absolutely flat as. Then we have interest. Sorry, that's not the interest rate. That was the interest rate. What we had here was, this is Fed Powell. And again, this has moved quite significantly because of the flight to safety going to the Swiss. Again, you haven't got much to go with there. You've got, if you look at the bottom, the low here and the high, we're just trading sideways here. So there's not a lot to go with. There's, apart from having a low test bar here, will it continue to weaken? Don't know at the moment. It's just one of those things, so much going on in the market and such a reversal. You can't say it's going in one direction or clearly in the other. The S&P 500, that was a bit of a roller coaster ride, wasn't it? Up and down, and you just basically at the end of the day, we're pretty much where we started the week. There's Friday, Thursday, Wednesday, Tuesday, Monday. So we started down there and finished up there, which is not a long way to go. But boy, did we, you can see where we felt it coming out of those meetings, the reversal of that, thinking the market, considering it wasn't as bad as they thought for some reason, I don't know, a continuation down, but it recovered strangely on Friday evening, which was Saturday morning here. So why it's recovered, not quite sure, but we'll see how it goes because everything else is not looking the best. So let's hop across to oil. Now, a couple of things you need to remember with an inflation or with a looming recession. One of the two things that you'll see oil come off and gold increase, and that's pretty much what we've seen. Now, down here at the beginning of the week, oil opened, it dropped and then bounced. Now, seriously, that's a 15-month low, by the way, that we're looking at there. It's going to bounce when you get that low. It has continued to drop. We had been hopeful at the beginning of this area here, beginning of March, that with Chinese sanctions being lifted, that we can actually see a bit of a return for the demand for oil, expected it to continue to rise. But unfortunately, US inflation, talk of a recession means demand is off because everything starts to slow down. So the energy demand is reduced, and that's what you're looking at. So where oil is going to go to next, I think we're going to go to the long side, to be quite honest. I think we're bouncing off a 15-month low. Obviously, that chart needs far more information. There's nothing there to really go with. And I just think everybody just needs to be really, really cautious at the moment. Seasonally, let's have a look at where this should go anyway. So if you have a look at a seasonal chart, this is a 25-year seasonal chart with a pre-election filter on it. So it just picks up every 4 years on a pre-election, US pre-election cycle, 4-year cycle, sorry. So look at where we are now. We're looking at, we've had this dip, we've had this move down here. So we have followed this seasonally, and we've had a push up, and then we've had this push back down again. But look at this into April, it's as jagged as it is, it's going sideways. The seasonal data isn't giving me any bias, clear bias anyway. So if you do see a setup, I suggest only take a small, as soon as you see a profit, take it, bank it, and move on. I can't see any major moves happening at the moment. And gold. Oh, God, I love my gold. Here we go. We had the bounce, didn't we? We had that bounce at the, excuse me, bounce at the beginning of March, came down, double bottom, and we had a fairly rapid move up. And that is just as a result of having inflation boiling away in the background. So oil coming down, inflation going up, interest rates increasing, and look, we didn't get a close, but we did actually peak above the 2,000 US dollar an ounce level, which was pretty significant. But again, no significant close above $2,000. I would have loved to have seen it $2,000, because otherwise I would have loved to be able to say, look, we've got to close, let's keep going. It's not that at the moment. It has moved up quickly, and gold has tendency to consolidate when it goes into that kind of, it's had a big move, it'll consolidate, think about it, and especially at this level, at the $2,000 US level. I really think you look at the 4 hourly, there's nothing there that's going to get you very excited, is it? So all we had was we had a pullback, a retracement in line with the trend line, but as soon as the interest rates were released, that is that bar there, that one, and it moved straight up, consolidated, moved up a little bit more, and then just had a little think about it. So if we have a look at the chart, the seasonal chart, to see if we can get some direction. Oh, look, here is the interesting thing. It is expected to move up around the 7th of April. So I've got that highlighted. That is that move up to there. It's only meant to last a couple of days before it comes back down again. So again, nothing significant. Is it meant to go sideways for the next couple of months? Yes, it is. Just be careful. Again, if you see a setup and you like it, then go take profit, bank it, and move on. Is all I can suggest. So again, pre-election filter. I've got the pre-election filters on both those seasonal charts. So where are we going to the week ahead, this following week? First of all, daylight saving changes for Europe and Great Britain. So guys in Asia particularly, make sure you do make notice of the change, take note of the change, and don't get left behind or sitting there, more likely sitting wondering where the action is, why things haven't moved. Tuesday, we've got Governor Bailey has 2 speeches. They're expecting some volatility because they are not normal scheduled ones, but at least he's got some stuff going on, and because everybody's listening to anybody speaking to see if they can decipher any kind of comment or direction, they're listening to them. Wednesday is USD consumer confidence, and Australia's got the CPI. Now, we've just had a state election and Labor government got in, and that means every state in Australia is now a Labor Party government. Significantly, I don't know how it's going to affect CPI, but at the moment, everybody's just, look, we'll see where it goes to. Australia's economy has been up and down a lot, like a few other countries as well, but we haven't been doing fabulously either. Thursday, crude oil inventories come out, or late Wednesday evening if you are 3 hours behind, but in Sydney it's 1:30 a.m. We also have the German prelim, CPI, final GDP, and USD unemployment claims. Friday is the Canadian GDP, but the big interesting one on Friday is a little bit more inflation data, which is the US dollar core personal consumption expenditure. Now, why is this interesting? Because we all thought look forward to the CPI. It's one of the primary inflation measures that the Fed looks at. So personal consumption expenditure includes everything that's aimed for the individual consumption, excluding food and energy. So why this is important, it is going to help determine whether they're going to go higher again at the next Fed or not. So whilst we might look over it, it is flagged red on your Forex Factory, by the way, but it is an important item to keep a handle on. Okay, excuse me. So as I said, going quickly. It's just both month end and quarter end, and quite a few bits to go through. As we can see from the markets, we've had up, down, gone sideways, no clear direction. I think the markets had a bit of a whipsaw effect the whole way through. So at the end of the day, we just need to be careful with what we're looking at on each one, listen to what the central banks or the governors are saying, and go from there. But I will just double check chat. Sorry, I haven't looked at any of the questions. So let me just go over and have a quick look at that. Sam, are we swapping over to Simon now? No. When the 81 bond investors will flee, how does it affect European currencies? At the moment, Daryl, it's really hard to work out what anybody's doing, because at the moment things seem to be changing at lightning speed. So let's just sit and wait. That's all I can say at the moment, because it is all over the place. Christine Lagarde comes out with some pretty curt notes, and she does it to keep a lid on things. And that's all we can go with at the moment, because we don't know who's speaking when and what's going to come out of their mouth next, to be quite honest, because we've seen just in this last week, even on banking policy and whether deposits are going to be guaranteed or not. One day Janet Yellen says one thing and the next Fed Powell says another. So yeah, like I said, you just got to keep up with the latest. Okay, any other questions? No. Okay, well, that's it for tonight. I hope you enjoyed that. It's a quick reflection of a review of last week and what we're doing for this week. Good luck, everyone, and all the best. Thanks, Sam.